Welcome to Realcast, the weekly roundup of the real asset markets. My name's Richard Betts and I'm joined by Nicole Dines, Paul Strohm and Dan Innes. Dan, let's start with you. What are your kind of key stories of the last 5 days?
First off, in the life science sector, it was announced that Science REIT, they plan to list on the London Stock Exchange to become the REIT with sole purpose to invest into British science laboratories. And this investment trust, which is, of course, going to be about the first of its kind among listed companies, is looking to raise about £300 million from the float. And it'll use the money to buy up new laboratory space in the UK's Golden Triangle between Cambridge, London and Oxford. It's been well publicised that, life sciences are amongst the hottest, real estate asset sectors, right now. And there's been a rush for laboratory space over the last year. Notably, Blackstone, they spent £850 million building an 800,000 square foot office and lab space in Cambridge. And whilst Brookfield, they bought several life science sites in the Golden Triangle again over the summer for over £700 million. But the decision for Life Science REIT to float, that was really driven by the emergence of a favourable investment environment. Supply's constrained, demand is high, vacancy is low, rents are rising, that's offering, a really attractive investment opportunity. Turning over to the Nordics, and this week, Slate Asset Management expanded its European platform by acquiring a portfolio of 25 sort of essential real estate assets in Norway for 103 million euros. And that portfolio comprises around 50,000 square meters of space across Norway, and the majority concentrated around its largest 5 cities. But the entirety of that portfolio income is generated by these essential goods and service providers, almost becoming an asset class of its own, sort of including 24 grocery stores let to Class A tenants, including Coop, Norge, Ritan Group and Norge Group. And they hold around 96% of the total grocery market share in Norway. So that acquisition is a bit of a continuation of Slate's strategy focused on stabilized grocery and essential retail throughout Europe. And finally, significant resi news was announced this morning in London. That's that housing association Peabody, they filed plans for 3,500 homes in a mixed-use scheme in Dagenham Green in East London. Peabody completed that purchase of the 45-acre site, used to be leased by the Ford Motor Company from Europa Capital and St Congar earlier this year. Plans for the outline developments include 1,952 private homes, 1,550 affordable homes, and that's providing housing for an estimated 7,739 people. And the social housing is going to be backed by an £83.7 million affordable housing grant from the Greater London Authority. So Greater GLA there putting its money where its mouth is. But Peabody have proposed building heights ranging from 1 to 19 stories, a secondary school, 54,000 square foot of industrial space in that development, as well as 47,000 square feet of flexible commercial floor space. So significant mixed-use projects bringing up there in East London.
Yeah, that mixed-use topic is certainly one that we're seeing across the markets. Came up as well in the session that I was running on the Portuguese real estate markets. And also I think that life science is one very interesting from a sort of impact perspective as well. Nicole, what have you been watching?
Well, from Dagenham that Dan was talking about to very much central London, Blackfriars, Hines, the big international real estate firm, has bought a massive 1.8-acre development site near Blackfriars Bridge, and is going to develop what it called for a new generation mixed-use development. It's already asked Foster and Partners to design the scheme, so it's obviously going to be a very high-quality one. The price hasn't been disclosed, but it would be a very significant turning point for that part of London, because the site has been vacant for a very long time. It was originally owned by Land Securities, and then it went through a series of owners. It was bought in 2014 by Black Pearl, a Malaysian company, for 114 million, and then sold. And they had planning approval for several skyscrapers, including one which would have been second only to the Shard on that side of the river, but nothing ever came of it. Nothing was ever built, despite the planning planning approval. And then it was bought by another consortium, the Hero Group, run by an Indian businessman, for 235 million. And now finally it's been bought by Hines. And we've seen Hines been very present in London in mixed use. They've already got 2 developments in Oxford Street and Bond Street. And they're also developing in Covent Garden in London, the new European headquarters. So there's a lot of activity that Hines has in London. And obviously they've said that that's a show how confident they are in the future of the city. Changing the subject completely, Real Asset Media had a briefing on senior housing, which is a theme we follow very closely. And the consensus among the experts was that the sector has survived the pandemic very well, and more and more investors are interested in it because they've seen how resilient it is. And there's very much a flight to quality. And then the reason, obviously, is the demographics. The key driver is an aging population. And it was pointed out that very soon the boom generation will join the ranks of over 65s. So very much a sector that is doing very well. And the shift to quality is obviously benefiting both the residents of the care homes and the staff. Another interesting session that Real Asset Media ran was a PwC that presented their new REDI. REDI stands for Real Estate Digital Ecosystem. And it's a new tool that they've developed that will enable data collection, data analysis in much quicker, much faster, and something that did not exist in the market before. So REDI, it's a very interesting development.
Yeah, it's interesting. And on that ESG side, I also noticed you mentioned Hines there, but Hines have recently underscored their commitment to ESG and decarbonisation by appointing Mike Izzo to a new position there as Vice President of Carbon Strategy. So interesting to see that coming through as well. Paul, what have you been watching?
Well, I've had a couple of interesting pieces of research across the desk. One from Colliers, which points to UK government figures that have revealed that the online portion of retail sales in the UK hit 25.5% for 2 consecutive months in the summer. Colliers said that marks a step change in consumer behaviour, and that figures for June and July could signal a new norm in spending habits for the retail market. They point out that during various lockdowns, online sales share of total retail sales occasionally hit 37%. That's obviously subsided, but Colliers is saying that the fact that spending levelled out at 25.5% for 2 consecutive months is a reliable signpost that we may have found a new status quo for online consumer spending habits. Meanwhile, research in a similar area from Knight Frank predicts that e-commerce could account for 30% of retail sales by 2025. And they say it'll fuel last mile urban logistics space requirements equivalent to 16 Wembley stadiums. The rise in sales from, they're saying, 27% to 30% by 2025 will result in an additional £37 billion worth of online retail sales. And because every £1 billion of online retail sales requires around 320,000 square feet of urban logistics space, this could drive 12 million square feet of additional last mile fulfillment space requirements. Knight Frank analysed the sort of hub and spoke networks servicing online retail and found that 23.5% of space is allocated to the spoke element of facilities, i.e. what we started to call last mile deliveries. And demand for these facilities is expected to grow as online shoppers require faster delivery times and logistics operators need to hold stock closer to consumers. Obviously, this sort of news means that investors' enthusiasm for the sector is undiminished, and investment into the UK industrial and logistics sector has already topped the full year total for 2020. With £10.6 billion invested, and that's expected to reach a record £13 billion by the end of the year. Following that logistics theme, among a rash of deal announcements in the sector, property investment manager Barings has bought a 128,000 square metre portfolio of Swedish logistics assets being developed by Skanska. And earlier last week, Crossbay, the pan-European logistics platform created in 2020 by real estate investment manager Mark, formerly Mayor Bergman, has acquired 2 warehouse assets of Poland, together worth €95 million. Crossbay said that Poland is one of its target markets for further acquisition as part of its ambition to become Europe's leading urban logistics platform. And since Mark launched Crossbay in May 2020, it has assembled a portfolio of more than 600,000 square metres.
Yeah, the growth of the logistics side has just been huge there, and that's interesting in terms of online retail and what that means in terms of last mile logistics. Thanks very much, Paul. Thank you, Nicole. Thank you, Dan. Look forward to seeing you next week for our regular roundup of the week in real assets.